Some observers have expressed the concern that by expanding its balance sheet, the Federal Reserve will ultimately stoke inflation.
And you know, Jeff, what I'm afraid of is they're going to keep doing what they've been doing, which the market hates. You can see the market hates it, because this is going to unleash rampant inflation around the world, rampant confusion in the currency markets, and you're going to have currencies gyrating all over the world. Bond markets are going to start to collapse, and then we're going to have a real problem. And that's why the stock market understands this. They're unleashing a inflationary holocaust. Because they don't know what else to do, and they're making mistakes.
My end value for the dollar is zero. Zero.
When is that going to happen? I mean, let me
not
ask
tomorrow, but obviously not tomorrow.
30 years, what are we
well,
talking about?
I think in like 10 years, 12 years' time, the US dollar will be like wallpaper.
Yeah.
The Fed's lending activities have indeed resulted in a large increase in the reserves held by banks, and thus in the narrowest definition of the money supply, the monetary base. However, banks are choosing to leave the great bulk of their excess reserves idle, in most cases on deposit with the Fed.
Before Barack Obama leaves office, there will be a currency crisis. The U.S. dollar will collapse, and prices in this country for consumer goods are going to go ballistic, and so will interest rates. And we're going to be living in an economy with unemployment closing in on 20% and double-digit inflation and double-digit interest rates. This is economic ruin that is coming, and it's because of the very policies that you're wanting Barack Obama to pursue.
You say that you now believe it is 100% guaranteed that we are going to have hyperinflation like Zimbabwe.
Yes, that's correct.
Consequently, the rates of growth of broader monetary aggregates, such as M1 and M2, have been much slower than that of the monetary base. At this point, with global economic activity weak and commodity prices at low levels, we see little risk of unacceptably high inflation in the near term. And indeed, we expect inflation to be quite low for some time.
Look at the dollar. It's soaring. It was supposed to crash, remember?
The dollar will have absolutely no value whatsoever.
So Jim Rogers has a simple message. He is selling all his U.S. dollars.
I'm using this rally to get out of the rest of my U.S. dollars.
Because now you're going to see the dollar really start to fall.
The dollar is going to be substantially lower.
If the Fed creates a second $1 trillion, it isn't going to do anything except drive up inflation and drive down the dollar, and we may lose our reserve currency.
The Fed's been printing money like crazy. $3 trillion. Expanded our monetary base. And what happened? The dollar went up. That's right, it went up. Look for yourself. Take a look at this chart. This is the dollar index. We go all the way back to the point where the Fed started all these extraordinary measures to try to help the economy, when it really started to put the pedal to the metal in terms of all this money printing. The dollar index back in 2008, just before the Lehman crisis, was at 72. Now look at it. Now it's at 84. An increase of almost 15%. Yet the Fed has expanded the monetary base by 400%. We've gone from bank reserves of $800 billion, where they were for years and years and years, into hyperdrive, all the way up to $3.2 trillion. And guess what? The dollar has gone up. It has appreciated. It's climbed. It has jumped. It has increased in value. You want me to say it another way? I think you get the picture. Yet all those same doofuses who said interest rates were going to spike and the economy was going to crash and we were going to have hyperinflation, they're still saying that the dollar is going to collapse. Hey guys, take the fucking blindfolds off. As far as that information, I think I'm going to file it in the useless information file. Bye-bye.